In today's video, we're going to be talking all about mechanical trading and explaining to you on why it doesn't exist. Now, this is part one of a 3-part series on how to build the confidence with your trading and how to build the skill of managing trades. And I think this is a subject that so many traders want to learn but don't actually learn because they end up learning another strategy or something else because they think that's better. And then they go and learn that and then realize, actually, I don't really know how to manage my trades. Where do I put my stop loss? Where do I put my take profit? When do I move my stop loss to break even? And not only that, the confidence. Confidence is a big thing in trading. I'm about to get a setup at the minute on USD JPY. Now, the reason why mechanical trading doesn't work is simply because it is very subjective. What do I mean by that? So let me explain to you. If you are trading an indicator with an arrow, so for instance, let's say the binary destroyer, and I said to you at 8 a.m., we take the first arrow or signal that appears on the binary destroyer. So here, okay, 8 a.m., the first arrow that appears or signal, we take a trade. Now that is mechanical. You don't need to learn it. It's very simple, right? If I said to you 8 a.m., take the first arrow that appears, it's simple, right? That's mechanical. If you haven't got that and it's pure price action, it's not mechanical, it's subjective because you have to learn it, okay? And the fact that you have to learn something is subjective. So if I said to you, okay, there is a support line just here and take a trade at a support line. The problem is now is that subjective. I'll see the support line and you might not see that support line, okay? And that's where it's not really mechanical, okay? Because you then have to learn support and resistance. It's like saying, oh, buy a house cheap, do it up, sell it high. It's mechanical. Buy cheap, sell high, make money. It's mechanical. But it's not. It's not mechanical because it's subjective. Well, what do you consider a cheap house? £1 million house in London is cheap, okay? £1 million house in the countryside is expensive. So is it cheap? Is it expensive? This is the exact same why mechanical doesn't exist. It is like me saying to you, right? Oh, look, we're below the EMA. Right, so every time price touches the EMA, we will take a sell. That's mechanical, right? It's simple. You can't go wrong with that. But you can go wrong because you can look at this setup and say, well, what are you considering a touch? Are you counting the wicks? Okay, if I just zoom in here, right? If I just zoom in here, you've got the wicks of the candle. Is that a bounce or are you counting a body? Are you counting the body of the candle? What about here where price is closed above it? Right? This is where you have to learn. Are we counting wicks? Are we counting bodies? Are we counting a close above it? If you look at here, okay, the body of the candle touched it. On this one here, price closed above it. So what are you actually considering a bounce, right? And that's why it's not mechanical. If you have to learn it, it's subjective, which then means that it's just not mechanical, right? You have to learn. And this is what brings it back to confidence building, okay? And the confidence part is very, very unusual because I've always said this, right? We'll do some simulating. I hope I'll explain to you how to manage trades and build the confidence up. I've always said that when you are trading a strategy, it has to be simple. It has to be simple that you know what to do every single time you jump on the charts, whether you're sitting on a beach in Dubai or you're at home with your family. You have to know what to do every single day, whether you're upset, frustrated, happy, tired, got lots of energy. You have to know what to do, okay? Now, the difference is now, this is where it gets a bit tricky, is every single trade that you take will be different. So you have to do the exact same every single day on when to take a trade, but the setups that you take will always be different. They'll always be different from the previous setup and it will be different to the next setup you take, right? So what's the in-between? The in-between is the confidence, knowing what setup to take, okay? So for instance here, okay, let's just look at this setup here, right? And we'll do some simulating, right? And this is why I always say, sit and learn. I actually had this conversation with a member earlier. I said there's a big difference between taking your first Mogwai reversal setup and taking your 1000 Mogwai reversal setup. By the 1000, you would have had the confidence, right? I already know, right, that I'm going to get a setup literally in the next 10 minutes on USD JPY. I know I will, okay? How do I know that? Because price is above the EMA, right? We've just created a higher high, as you can see just there, right? Where's the previous high? Just there. Where's the previous low? Just there. Where's the new higher low? Just there, okay? So I know I'm getting a setup in the next 5 or 10 minutes on USD JPY. I already know that, okay? I'm 5 steps ahead of the market, okay? So I also know that if I look at the MACD's just started to cross over. We're getting an engulfing candle now. Now watch this, okay? I would actually, if this was me, I'd be taking a trade right now because I'm 2 steps ahead of my own indicator, okay? Because I'm doing the exact same thing every single day. I have the confidence, okay? Even if I get it right here, and even if I get it wrong here, it's the confidence that knowing I did the right thing, okay? And the more setups you take, the more you build the confidence up, okay? So I'm going to just imaginary take a trade here. I'm not going to get my phone out and actually take a trade. But this is exactly where I would take a trade, okay? So I'm going to put a stop loss of 9 pips, okay? 9 pips just below the EMA, okay? Now, if I just zoom in here, you will actually see, okay, that TCA line. I'm just going to add the binary destroyer, okay? Watch this, you ready? Okay, so I've got an arrow, okay? Here we go here, see here? We've got diversions on the MACD just there. Okay, there's my triangle. See there? See there? See how I'm already in the market. I'm already literally, just from there, I'm already 3 pips in profit. Okay, and all I'm doing is just having a conversation with you. Okay, I'm already ahead of it. It's confidence building. Okay, now this is what I'm trying to explain. Is this method or what I'm trading here is simple, right? It's not difficult, but every setup will be different. If I just show you, here you go. Now I've got my Mogwai signal, all green. I'm already in the trade. I'm literally halfway to take profit, okay? Let me just hide this here, right? But let me show you something, right? You see how we got higher highs, okay? Higher lows. We've got our setup. MACD's oversold. Beautiful. Now, if I just show you a losing trade now, right? If I just show you a losing trade, okay? Okay, this is a losing trade here, but to be fair with you, that's just a valid losing trade. That's just a loss. Okay, I'm trying to find you a trade that meets the rules. Let me just try and find you a setup. No, in a downtrend. GPUSD. Okay, that was okay, here we go here, right? This is going to be a interesting one. Okay, right. I mean, this one's really annoying that we got stopped out. Look at that one. Let's look at this one, right? Okay, so look at this setup here. So same again, we've got our signal here, okay? MACD's gone overbought, okay? It's a downtrend. Now, why did this one lose? And this is the confidence building. I actually took this earlier with the BD members. It was a straight loss. But look at the difference here, okay? You see how much price had trended down and then pulled back, okay? So for me, I really want to be taking sells at the crossover right here, okay? The closer it is to the TCA, the moving average, price crossing over, the better the signal. You also have to remember as well, I don't have a diversion signal here, okay? So if I just look at this particular setup, you notice how I don't have a diversion signal here, okay, on the MACD, see? Okay, see how there's no diversion signal there? Okay, but if I actually look at the other setup on USD JPY that I'm currently imaginary in, right? You see how you got a diversion arrow just there, right? So can you see the difference now? is on the other setup, it met the rules, like this one meets the rules, but it's the little details that gives you that edge, right? It's confidence building. It's knowing what to do in every situation, right? And unfortunately, I can't teach confidence building. I can show you how I trade on videos. I can show you in one-on-one webinars, but the confidence building has to come from you, okay? I cannot always be over your shoulder telling you right or what or wrong. You have to learn this. So I'm going to do some simulating now on USDJPY because I took this seller off earlier, but I just want to show you a few setups, okay? So let's just press play on this simulator here, okay? Now watch the way I trade. I'm not looking at any other time frames. I'm not using nothing complicated like, technical price action. I'm just confirming that price is in a trend. It is doing what I want it to do. So at the minute, price is going sideways, okay? It's zigzagging in between the EMA. So I already know price is going sideways. So I'm looking for a break below here and I'm looking for a break up here because at the minute, price is going sideways. That is essentially it. Previous high, previous low, okay? Sideways. Well, this strategy, the Mogwai Reversal, is a trend trading strategy, okay? So we want to be trading with the trend. This is not a trend. So if I get a setup like here, okay, in fact, this isn't even a setup because it's touched the EMA, okay? So that would not be a valid setup, okay? So you wouldn't take that, okay? Again, you could say, well, that met the rules, Jamie. Well, no, it didn't because it touched the EMA. Again, that is subjective because you can sit there and say, well, what are you considering a touch of an EMA? A bounce, a break? I have a rule to make it black or white. If it touches the EMA, even by a candlestick, will not take the trade because it has to be, ABC, right? The hardest part is the confidence, knowing by looking at the setup, because every single setup you take will be different. So as you can see here, price, I think this is, okay, price is going sideways, okay? Now stop. You see how we've just broken below this EMA. I'm trading what I see, not what I think, okay? If you tell me this is how the market moves or, market's going to do this, you're full of fluff. Okay, I just trade what I see. So I see we've just broken that lower low. So maybe we're going into a downtrend. I don't know until we actually go into a downtrend. Okay, how do I know we're going to go into a downtrend? I don't. Okay, but I'm looking. Okay, now you see here, now we're going down. There is the previous low. This is the previous low before that one. So where was the previous high? Here. There was the previous one. So it looks like we're going down. The EMA's turned red. So I'm pretty confident we're going down now. Okay, so let's just wait until we get a setup. Okay, so price is going to pull down now. Because price is pulling down, I'm already expecting a pullback. Now, what I'm looking at now is the distance between the pullback and the EMA. Because if it touches the EMA, invalid. I'm not taking the trade. So we're going to see. Now I already know, right? Look at the MACD. See how the MACD is going overbought, right? And remember what I said. There's a difference between taking your first Mogwai reversal and taking your 1000 Mogwai reversal. I can sit here and say, yes, you should trade the Mogwai reversal because it's mechanical. It's a simple strategy. It is really a simple strategy, but you know what I'm doing here is experience, right? It's just confidence, right? I'm already anticipating what's going to happen. I'm just waiting for it to happen. If it doesn't happen, I don't take the trade. So I'll do it bar by bar, okay? You see how we come down now? Now I already know the MACD's crossed over here. I already know that TCA line. Watch this, one candle. Can I do one candle? Here we go here. Watch this, ready? There we go there, bang. Okay, so watch this one. That TCA line will turn red right now on the next candle. You ready? Bang, see that? Boom. I'm already ahead. I'm already ahead. I know that's happening. We're going to get a signal here. Now, what I would do here, if I just bring up the Mogwai, see here. So I've already got my little triangle just there. See that? So this is where I entered the trade, right? I'm already ahead of it. I put my stop loss out of the way because, again, it might come up to the EMA and bounce off it. For instance, here, I'm going to go with a 16 pip stop loss. Now, this is what I'm trying to explain to you. You see how this setup is different to the setup I've just took on USDJPY right now. They're both the same setups. They meet the rules, right? I'm not doing anything different. The way I enter my trades are exact same, but the setup is different. And this is where it gets confusing because you watch videos or you take online courses or you have a PDF and you go, this is the perfect setup. Just take a trade when this perfect setup appears. But the problem is when you get a setup, it might not be slightly perfect. Well, do you take it? Because it slightly is different to this perfect setup. And this is where the confidence, right? I'm going to enter this trade. Now, as soon as I'm entering this trade, and I always get asked this, is when do I take profit early? Again, you can't give a direct number on this. I can't say as soon as the trade goes 5 pips, I'll move my stop loss. Because on this occasion, my stop loss is 16 pips. On another setup, my trade could be, if I just show you, I can't show you because I'm in a replay, but on another setup, it could be 5 pip stop loss. So can you see how going for a 5 pip take profit here or moving your stop loss when trade goes 5 pips would be stupid. If your stop loss is 5 pips, okay, then obviously as soon as the trade goes 5 pips, you're already at a 1-to-1. On 5 pips here, I'm not at a 1-to-1. I'm not even close because 1-to-1 would be 16 pips. So you can see why it's just confidence, right? There's nothing else to it. And only you can learn that. Okay, so watch this, ready? So you see I've got my little Mogwai signal here. Let me just, I'm going to do this a little bit bigger, okay? So as soon as the trade goes to, okay, hold on here, price comes down, bang. Is that a 1-to-1? No, that's not a 1-to-1. Come on, coming down to a 1-to-1. Nice. Now, as soon as the trade goes to a 1-to-1 now I move my stop loss to break even. And then I go for take profit of, let's just say 32 pips. Okay, do I get 32 pips out of the trade? No, I get stopped out. Now, on this occasion, I took profit. I did the best thing I could possibly do. I made money. I tried to push the trade. I tried to get a 1-to-2. Unfortunately, I didn't. Now, did I do the right thing or wrong thing? Maybe I could have closed it off early, maybe down here. But you can always look at things in hindsight. You can always say, I could have closed it off here, but then price could have gone here or here. So for me, I did the right thing. I took profit. I didn't get greedy. I managed the trade successfully, okay? So again, we're going to repeat the process. So we're going above the moving average now. So perhaps we're looking for buys, okay? So I'm just going to hide the binary destroyer again because I like to have clean starts. But again, I'll always use the binary destroyer as a confirmation, okay? Now, this is going to be interesting. Watch this one. I'm going to get a sell up any minute. Ready? Now, this is... if I just load it up here. Okay, now this, I would take this, but I don't think it's a very good setup. And the reason being is because I like to take the first pullback, okay? So you can see how we've had a pullback here and we really came close to that EMA, crossing over there. See that? In theory, that has crossed over, but only just, okay? This is obviously a clear crossover, you can see here. So even though this one meets the rules, it's not as clean, and I say clean, as this one. Because this one here, right, this is literally the first pullback, right? You see when we've crossed over that EMA, this is black or white. That is the first crossover on the MACD, okay? This one here, well, you know, do you count this as a first pullback? Well, I would look at this and say, well, I'm going to take the trade because it meets the rules. However, I'm going to be a bit cautious because I'm going to say that this is the second pullback. This is the third. It's on the borderline of what I would consider a pullback. Any lower, this would be the second pullback. So I'm going to be a bit sensible with this one, okay? So normally I'm going to reduce my risk. So instead of going for 1% on this one, I'll perhaps go for 0.5%, okay? I've already made money on this one. So I'm already up like 1.5%, or let's just say 1%, okay? So this one, I'm going to be a bit brave. If I can get 0.5%, if I can make, 0.5% out of this trade, I've made 1.5% off 2 setups. Beautiful, okay? So you can see what I'm doing, building the confidence. I'm analyzing, okay, how much profit have I made? What can I afford to risk? Is this a valid setup? Is it a good setup? Is it a perfect setup? Something so simple doesn't actually become simple, you see? And this is why I say keep trading simple. If you're learning a complicated way of trading, my God, you are going to struggle. And I can tell you that from experience, okay? Because you're now sitting there going, why are you making this so complicated? It's not. It's just, this is trading. It's confidence building. So again, I'm going to go for a 10 pip stop loss on this one. 10 pip stop loss. So I want to get realistically close to 10 pips. If I can get a 1-to-1 out of this trade, that would be beautiful. I don't see that happening, but we'll see, okay? Let's see what happens. Okay, now you see, I'm going to pause it here. You see how my stop loss is below the EMA. Okay, so it's protected. So I want to see what happens. Okay, now it's still going sideways, So maybe I might consider. Okay, bang. Now it comes up. What was that? Okay, so that was 6 pips. Okay, so maybe could have closed it off early. Okay, but we don't know. I'm still in the trade. Okay, now you see how it's coming below. So now look at this, and this is where I'd actually close this trade off. Now, is this the right or wrong thing to do? I don't know, right? And that's the key. I'm only trading what I see, okay? If you look at this setup here, right, it literally bounced around, where it literally went straight into profit. There was no drawdown at all with this trade. Zero, zilts. This one, it kind of went sideways, bounced off the EMA, created a high, and then dropped. And it looks like now we've finally broken that EMA. So we're going into a downtrend, right? We've got the high, maybe a higher low. Maybe it's going to go into a downtrend. So I would probably close it off early here, right? Because you can see how it's definitely coming down, okay? Now, keep an eye on this one here. If that's the low, this has to be a lower low, right? This is, should be going down, okay? So let's see what happens here. I'll get stopped out. Now, did I do the right thing and wrong thing? Again, it's confidence building. I've closed trades off early loads of times, and they've gone flying. BD members know this. I'll take a trade and I'll close it off at like 1% and it will fly off to 10%, right? But at the time, I did the right thing. You can always look at stuff in hindsight and say, well, if I do this, I'll make loads of money. Okay, well, check your bank balance. That tells you how right and wrong you are in life, okay? So here, okay, price is going sideways. See how price is going sideways again? So for me, I did the right thing on that one. I'm happy. Okay, yes, I lost maybe a bit of money, but I'm still in profit. This is good. Okay, so same again. I'm marking the low. I'm marking the high. Okay, what do I see now? I'm waiting for a break. Okay, so let's see what happens now. Okay, so it looks like I'm waiting for a break perhaps to a downtrend. Now I know I'm going to get a setup here because I took this setup with the BD members. Okay, so see here. Now watch this. What do I see? And again, this is a really, really good setup. Okay, because we have high, we have a lower high, we have a low, we have a lower low. I'm now pulling back. The MACD starting to go overbought. Okay, let's see if we finally do go overbought. I'll do it really slowly. Okay, here we go here. So it's same again. You see how I got a MACD arrow, a diversion arrow just there. Okay, so I'm expecting a setup, boom, just there. See here? Right, we're starting to cross over. Just now, you see, watch this, ready, look, bang. Okay, now I already know this, so this is where I would enter the trade because I know the next candlestick, bang, TCA line, crossed over, signal. Okay, I entered this trade literally here, like right where this candle is here, because I already anticipated this happening. I was 2 steps ahead again, right? And this is what I'm saying, it's confidence. So if I take a sell here now, a short position, if I take a short position, I think I had a 10 pip stop loss on this one and a 20 pip take profit. And I got a straight 1 to 2 on this one. So if I just go like this here. Now watch this setup. Again, I don't know if it's going to go sideways. I don't know if it's going to go straight into profit, but we can just analyze, okay? Price pulls up. I'm waiting for this break below here. Let's see what happens. Bang. Now what I could do is at this point here, now I've just hit a 1 to 2, is move my stop loss down to break even. And I could go for 1 to 3, 1 to 4. There's so many things you can do at this opportunity. But the main thing is get the profit out. Get the profit, you're going to feel more happier, you're going to feel more confident, you're just going to enjoy your trading more. Whatever happens now, it can stop me out, I've made money. If I go for 1 to 3, whatever, right? Let's see what happens. Price goes sideways, but we've just broken that low. You see how we've broken that low? So I'm pretty confident now we are going to go into a downtrend, okay? Bang. 1 to 3 got hit. Thank you very much. And oh, I'm just curious. Let me just end this replay. Done. Okay, there you go there. Bang. Straight away, I've got a 1 to 2, a 1 to 1. Now, this is where I take profit, right? I take profit here because I made money. I moved my stop loss to break even. And then I think, right, bang, let's go off. It doesn't matter what you set your take profit at now. Set it at bloody 500 pips if you want. I mean, if you really want to be brave, set it up right up there. It doesn't matter. The key thing is we built the confidence to know what to do. So I'm going to leave that there. I hope you enjoyed that video. This is part 1. Part 2, we're going to do the exact same, but we're just going to start to go into it a bit more detail. You know, how to close trades off early, you know, what kind of money management we can use, etc. So I hope you enjoyed that video. My name is Jamie Palmer, and thank you for watching.